What is going on, everybody? Welcome back to Finance with Parks. In today's video, we're going to switch up the content a little bit and talk about how much it costs to buy a professional sports team, specifically in baseball. Now, I know this kind of seems like a deviation from our standard mortgage insurance or investing in stocks, but who occasionally doesn't like to talk about the more expensive things in life? Now, growing up, it was always a dream of mine to own a sports franchise. I mean, what cooler job is there walking into your own stadium and get to watch your own team play? However, unfortunately, that dream just seems to be becoming less and less of a reality as the value of sports franchises has skyrocketed. You know, I can't say I'm surprised, but let's talk about the latest example in Major League Baseball. Just last week, the New York Mets sold for $2.4 billion. Now, this was purchased by hedge fund manager Steve Cohen, whose net worth is even more ridiculous at north of $14 billion. For a little perspective, think about all the things you could buy with $24 million, which is more than most people will make in their lifetime, and then multiply that number by 100. Now, a lot of the details behind the transactions are hush-hush, so just keep that in mind as we try to give you as much of the specific data as possible. Back to the deal, though. Could you imagine being involved in that transaction? Yes, your total is going to be $2.4 billion. Is that going to be in cash or check? I mean, an absurd amount of money. And for a sports team, I hate to call it a hobby, but I mean for fun, right? But when there's only 30 major league teams to choose from, for all you economics majors out there, supply and demand is a very powerful thing. So beyond just the sales price of the team, I want to talk about why it's important to highlight Steve Cohen's net worth. Now, baseball is an organization that doesn't have a salary cap, which in other sports sets a maximum limit that those teams can pay out to their players. Now, baseball has implemented something similar called the luxury tax, but that still doesn't set a maximum on the amount teams can pay their players. It just incentivizes them to not pay a ridiculous amount in salary, but if teams are willing to invest the cash, they really can do whatever they want from that perspective. Why this is important is because the knock on the previous Mets owners was that they were very hesitant to spend money. A lot of people assumed that the team was strapped for cash, which is crazy to think about because in a big market like New York, the TV deals are just substantial. However, now that baseball has sort of turned into a pay-for-play league, you have teams like the Dodgers and the Yankees signing all the best players. It takes a lot of cash to be competitive in these sorts of markets. So I thought that was a really interesting thing to highlight because Mets fans were not only happy that the current ownership sold, but that Steve Cohen has a big enough bankroll to be able to come in and impact the franchise in that way. Obviously, it'll be interesting to see how much of his personal money he's willing to put on the line to build a championship team. That remains to be seen. So now, talking about the market that the team plays in is obviously extremely important to the value of the organization, which you will see in contrast to our next example. Back in 2017, the most recent MLB team to sell was the Miami Marlins. Now, the Marlins sold for half of what the Mets did, still a crazy amount at $1.2 billion, but substantially less for what we'll call a lower market team. Now, this sale was led by Bruce Sherman and the other high-profile name, Derek Jeter, the famous shortstop from the Yankees. So although Bruce Sherman and Derek Jeter were the high-profile names published, this deal was actually done by a group of 8 to 12 investors who all pooled together money. And that has become a really popular way to purchase sports franchises because not everybody is like Steve Cohen who can afford to pay over $1 to $2 billion themselves. Now, fortunately, Forbes actually published a lot of the financials behind this deal. So the sell price was $1.2 billion, and the group of investors came up with $800 million in cash, so 2/3 down. That was led by Bruce Sherman, who contributed $400 million of his own money. Now, Derek Jeter is highlighted because of his name, but he only contributed a mere $25 million. Could you imagine putting in $25 million of your own money and still being looked at as sort of the peasant of the group? Now, another thing I want to highlight with the Marlins deal is the substantial increase in the sales price. Back in 2002, Jeffrey Loria purchased the team for $158 million. That's a 659% return to get to $1.2 billion. Another curveball, though, is in 2017 when the Marlins were bought, they were projected to lose over $70 million in operations that year. So stepping back for a second, I think that's a really important thing to highlight as far as buying up sports teams goes. You know, if you have the attitude that you're buying a sports team as an investment to make you a ton of money, that always doesn't turn out to be the case. Although we highlighted how much Jeffrey Loria made in the sale of the Marlins, on a year-to-year basis, there is a surprising amount of teams that lose money every year. You know, owners with experience have said buying a sports team has to be done as a hobby or for the love of the sport, not to make money. Now, for the final example, let's talk about something a little more reasonable from an affordability perspective. And that would be minor league baseball teams. Now, for those of y'all that don't know, the minors are like a training ground for the big league teams. You have AAA, AA, and Single A, all with players who are hoping to make the major league roster. And what's cool is you have the opportunity to, in theory, purchase any of those teams. Now, back in 2017, USA Today wrote an article about the value of those franchises. The article cited that the top 20, highest valued teams were on average about $37.5 million. Now, don't get me wrong, still a stupid amount of money. However, it's not $2.4 billion. And that $37.5 million number was also up 35% from 3 years prior. So from what I can gather, buying a minor league team also has a lot more flexibility and we'll say the financial structure. You could pull together with 37, 38 of your best friends, put in $1 million each and buy one of the more valued minor league franchises. The amount of money required to put down is also less, as some deals have been seen only putting 45% down, which for a $38 million team would be about $17.1 million. That is in contrast, obviously, to the Marlins deal that put 66% down in cash. So as far as day-to-day operations go, one minor league owner highlighted that there are teams who make money on a day-to-day basis, but there's still a good majority of them that don't. I was reading an article just the other day that even the NBA is coming into something similar, where they're not making as much money as they used to, and their expenses still continue to climb, and they're not going to have enough cash to be able to pay all those things out. What happens in a scenario like that, what NBA owners were talking about, is selling a portion of the team for cash to be able to bring in more money into the business. Now, this specific owner went on to say that his team could make money. However, he aims to just break even on a yearly basis. His motivation behind owning the team was a way to give back to the community. So by lowering ticket sales and concessions, he's made going to the ballpark a lot more affordable for people in the community. Alright, so hope you all enjoyed the video today. If you could like it down below and subscribe to the channel, that would be awesome. We're still posting 2 videos a week, and if you liked the change up of talking about, we'll say, dream ways to spend money, then let me know down below and I can start making more of these because they are fun to talk about. Alright, thanks again for watching, and remember, finance is fun. See ya.